Welcome back to another week in review. We're going to be looking at the trading week of December 1st, 2025. We're into the last month of trading for the year. Have about 20 trading days left or so, maybe a little bit less than that for the year, and it's been a wild one. We've seen some pretty crazy moves this year. Definitely one for the books. So as we open December, big thing to keep in mind, and at least for me, is that December seasonality generally leans obviously to the upside. On a 30-year sample size, December returns about 1.3 or 1.4% average, 1.3% median, with about a 4% variability. So it's still overall on that sample. I did 30-year, or I ran 30-year to basically have two huge outlier events in it, which would be obviously 2001, 2008, and I guess you'd actually have COVID, so 2020. So all things considered, 77% of instances are positive, average return 1.3% on the month. So bigger picture, that's generally what happens. Obviously, we take this day by day, and that might not be the case, but that's how I generally look at things. On the bigger picture, stats, perspectives. What have we done in the past? Obviously, the past doesn't dictate what we do in the future, but can give you a pretty good idea, at least, of what the general positioning looks like into the end of the year. So we'll get some data out of the way. We don't really have too much this week. Monday, 9:45, we have manufacturing PMI. 10 a.m., we have ISM manufacturing. Then we have Powell speaking at 8 p.m. I'm not sure what he's talking about, but we have Powell on the calendar at 8 p.m. on Monday. Tuesday, we have Bowman speaking at 10. Don't really have anything else that I'm paying attention to on Tuesday. Wednesday, we have the ADP print 8:15 a.m., 9:45 services PMI, 10 a.m. ISM services. Thursday, we have jobless claims at 8:30 a.m., and then Friday, we have consumer sentiment as well as the PCE print at 10 a.m. So, bigger picture, November's closed. Obviously, we have a hanging man candle, if that's what you want to call it. I know a lot of people that are in the the traditional technical analysis space will look at this and say it's bearish. It could be. I don't put a lot of weight, honestly, into candles myself. I respect it, but at the same time, it's just I don't really look at things that way. So we have this. We have a hanging man candle, so to speak, on the monthly. The big thing, at least on the futures. Same thing on the futures, but big thing on the futures market, as well as cash, is that the monthly has turned into a balance range. So the highest time frame, at least that I'm looking at on the monthly perspective, has turned into balance. So we've stopped one time framing up. We are into balance with November close. The weekly is back into balance. One time framing down was ended last week. Obviously a short week, lower volume, but we have one time framing down ended. So the monthly, the weekly are in balance, and the daily is one time framing higher. So the big thing at this point in time, at this juncture in the market for me, is can the seasonal momentum hold up? The general seasonal momentum hold up? Can buyers, close this year off strong? Our funds, our bigger players, going to start, moving the tape higher to have better closes, better returns on this year. These are all things I think about when it comes down into December, just how we're going to close out a year. In my opinion, probably. Again, just looking at past instances and looking at, generally how December gets positioned, I would think at least the ability for this market to potentially retest all-time highs is there. And where I'm looking at looking for these trades, or at least where I'm looking at, the management perspective of where this comes into play on the S&P 500 futures, is into November's high, obviously right here, into down into 68.06s, into 67.90s. So the first place on this market that I'm looking for is potential backtest of 68.06 to 67.90s. I think as far as how last week is structured, the structure below us is quite poor. So in the immediate term, I think a potential short-term correction is definitely on the table. We went very far very quickly last week on low volume and poor structure. So for us, backfilling some of said structure is a completely natural move. And it might set up a decent short trade early in the week. But the bigger picture for me is twofold. So what I'm looking for, first and foremost, is if this market wants to maintain momentum quickly, it's not going to spend a lot of time below 6,800 to 67.90s. So this is last week's value area high. This is the RTH high of the week of the liquidation day and that week that took us into and below October's lows, which obviously were recovered. So we're not going to spend too much time below 6,800 to 6,790s in a strong, fast position market that wants to go higher. Anything above last week's high, so if we have, some sort of gap up or gap and go on Sunday and Monday, which I'm not expecting that, but if we have any acceptance above last week's high at 6860s, then it's going to be only longs for me. So the immediate target will be that inside weekly high up here at 6890s, but ultimately above November's high, above 6860s in my opinion. This is going back up into all-time highs. So I want to stay long if we're above this. But the first test lower I'll be looking for is a move down into 6806s to 6790s. If we're below this, then I think a natural back test is going to be back into this blue range right here. And I'm going to use this as the line in the sand for buyers this week and probably potentially even this month. So this is important for a few reasons. So we have the 20-day simple moving average. We have the 50-day simple moving average right here. We have last week's VWAP. The all-time high anchored VWAP is down into 67, 64s. So this cluster right here is going to be pretty crucial, and down into the single prints that broke us up into November's high, up into 55s, into last week's POC at 67.20s. So it's a bit of a larger range that I'm looking at, but I think as far as, line in the sand for me, the absolute limits down here would be the 67.50s to 67.20 to 30 range. If buyers want to put in a higher low, if they want to start changing the short-term trend and want to test those all-time highs, we shouldn't go much below this, in my opinion. So from a trade perspective, it could be twofold. I think if we're failing last week's high, if we're failing November's high in the immediate term, we could have a trade back down into 6,800 to 6,770. If we see decent lows form into this range, then again, I'll be looking for that long trade to ultimately get the continuation longs back up, potentially and back up into all-time highs. If we're below 67.90s, I'll be looking for that move back down to backfill this blue range down here to at least test 70 to 60, but probably more likely backfill this poor structure down here into 67.20s down into the base of this. If we're below 67.20s, then I think the potential for a larger corrective move in the short term is there. We could potentially come all the way back down into 66.70s, but I think more likely, considering how low volume this is in the structure here and how poor this is, I think we'd actually probably come back down into this naked POC, potentially into 6600 to 6580s. There's really not much below this, which is why I'm using this as a line in the sand for buyers. So for puking below this, I think the ability to move back into the 100-day moving average, as well as this naked POC down into 6580s, is definitely there. So I don't like speculating, obviously, on
bigger moves in the market because frankly it's pointless most of the time as a day trader. I'm looking for those intraday rotations, but I think being aware of areas that I look for that I think need to hold on a higher time frame basis is important. And I think if we're going to see new highs get put in this market, we're not going to spend much time. Really, we shouldn't spend too much time below 67.90s. But the bigger picture is I don't think we spend too much time below this blue highlighted range right here if this market wants to put in new highs into the end of the year. So if we have an early puke, if we have some structural correction, I'll be looking down here potentially for longs and good lows to get us back up into those highs. NASDAQ is going to be basically the same. Obviously, NASDAQ's been lagging quite a bit as we've seen some rotation out of tech. But as far as what I'm looking for, again, early pivots are going to be basically 25,300 to 25,175. And again, we have the 20-day, 50-day simple moving averages down in here. We have last week's value area high. And again, all of this is structurally poor, but I don't think we want to see too much time spent below 25,100s basically. The line in the sand, I think for simplicity, I'm going to be looking more at the S&P because it's leading, and I think it's going to be the easier trade to pair risk against. But the big thing on the NASDAQ I'm going to be looking for is 24,900s, and it's going to be kind of the same idea as ES down into that lower range. If we start getting below 24,900s, then I think obviously a bigger corrective move in the short term is definitely possible. Could easily backfill all of this. Again, very poor lower volume. We could easily backfill all of this back into the 100-day, back into October's lows again at 24,370s, and we have a naked POC down into 24,230s, which we have to take note of as well. So we start puking below 24,900s, then a larger corrective move in the short term, I think, is probably what's going to happen. And I think ultimately down into the naked POC, back into the lows that we came from, is not necessarily out of the question, especially with how, how big some of these moves have been. And if we start seeing, some sort of volatility spike in the short term, which is entirely possible. So bigger picture, I think it would be nice. I think the easier trade, honestly, is just testing the upper limits of the current monthly balance that we're in. The other thing I don't think I mentioned, it's noted here, but the other thing I don't think I mentioned is that the 6740 range is about the midpoint of the current monthly balance that we put in. So again, it's a big, big pivot. There's a big, big range that we need to pay attention to and whether or not this market wants to go higher. I don't really have any inclination that I want this to go up or down, but as far as from an easier trade perspective, I think holding this for new highs in the end of the year will be a simpler trade than trying to fade this in the middle of a giant balance range. That's at least how I look at it. So keeping it simple, keeping it short. Hopefully that helps. If you like the video. If you haven't subscribed to the channel, please do. Appreciate your time. Thanks very much.